Hello traders, welcome to Trade Forex with Gabe. We'll be looking at the weekly Forex forecast for week 44, November 11th through to November the 11th. As always, would like to start with the currency strength meter. And again, we have a week screaming market opportunities are shrinking. But yes, it is better than the previous week. As you can see, October 31st to the 4th, you saw how flat the market was. You could see how corrective the market was. Last week, I heard a lot of traders, complaining they couldn't tell exactly what is happening in the market. Well, we give you the best outlook here in our weekly Forex outlook to tell you when to expose more, take more risk. And clearly, last week was not a week for you to expose much of your account because the market, as we could see from the strength meter or strength outlook, there were no dominance in any particular pair. Now, this week, we see a little bit of an improvement. Things are steady now, but still, it does not show us clear-cut market opportunities. But as always, I will be walking you through some of the best setups I've looked at, and that's what I do every week, to present you some of the best setups you could trade and use your own strategy to find an entry and exit on your trades. So let's look at what the economic calendar is showing us or telling us for the week. Well, let's start from last week. So last week, we didn't have much of an economic news from Monday, but on Tuesday, we saw the Reserve Bank of Australia coming up with increase in their rate. Also, we have the ISM positive ISM news, and then the JOLTS job opening also coming out positive. We had employment change in New Zealand, and Reserve Bank of NZD also governor speak. Then on Wednesday, we had FOMC, where of course we had rate hike, and we saw how the dollar index rallied on the brinks of that news on Wednesday. On Thursday, we saw the Bank of England also coming up with a rate hike to 3.0%. And then on Friday, on same Thursday, we had the ISM PMI data, which is recessionary, also coming out. And then on Friday, we had Canadian unemployment change, and then the NFP, non-farm payroll news coming out. Now, this rally, then all of a sudden, it came out positive, but then began to sell off on unemployment rate. Well, what this signifies is that there were more layoffs in the job sector in the US, and which traders saw as more bearish, and they began to sell off in the market. So let's look at what the week holds for us. And from Monday, we don't have much of an economic news. Tuesday also cleared up. Wednesday, pretty much cleared up. But on Thursday, we have the CPI data coming out depending on what time zone you are in. But this is one of the most volatile news for the week. Expect high and much volatility on the brinks of this of the CPI news coming out on Thursday. So I don't expect so much to happen affecting the dollar, but leading up to this day, I expect to see lots and lots of volatility coming into the Forex market. Then we have on GBP, we have the GDP news coming out, and that's pretty much it for the news. So let's look at what the charts are saying. And let's start from the dollar index. So you could see from the currency strength meter, you could see that what we're just having is a choppy market. Pretty much we ended where we started off the week. You could see where we started off the week. And of course, again, market closing up on the same level as we started. Now, you saw how the market rallied up leading up to FOMC. And then after the NFP news, you saw we're back to the same level as we started off the week. Last week, I was really bullish. I told you I was bullish on the dollar, and I'm still bullish on the dollar, really. You take on the D1, you see that we're still structured to the upside. The dollar has not yet changed its bullish structure, just that we're having more of a correction. You take this down to the line chart, you will see we're beginning to have a triangle. And if you take this, let me see, take this a bit up here, you see that we're having a descending triangle. And of course, I'm expecting a bullish breakout from this descending triangle, at least to the level that we've been anticipating, which is the 114.64. But prior to Thursday, I expect price to still sell off. I expect the dollar to sell off down to this level. Let me give you that level so you can know what you're working with, which is down to the 109.28 level before we begin to see another rally on Thursday once the news comes out. Okay, but prior to then, I expect more sell-off into the dollar towards the trend line or towards the horizontal support level. Now, with that said, with the anticipation that dollar could sell off some more, this will inform, I will try to run through or go through some of the dollar pairs. Of course, they are not my highest or best pairs for the week, but I will show you what the trade setups are. And then I'll go into some of my best trade setups for the week. Oil, we began to see oil break out from the bearish structure that I've always said. I believe oil was bearish, but last week with what happened, we saw the breakout from this channel. And of course, if dollar continues to sell off, I will be this will be sustained at least first level to the 93.58 level. And if it break above this level, we'll see price rise to 97.51. Of course, a break in channel will see price travel the distance of that channel. Okay, and the last part of that channel is 102.00. So on the H4 charts, my first target is for price to rally up to 93.58 level. So as the market opens or resumes, I expect to see price make some correction before making it up to the 93.58 level. After this level, the next level is the 97.51 level. So from last week, for those of you that traded last week, I was expecting, we expected this FIB 62 level to hold, and it held pretty well. We sold off on that level before we began to see, this rally in oil. Okay, so that already clears out our trade outlook from last week. So this week, this is not a fully bullish structure yet, but then on the intermediate, I expect oil to rally some more. Let's look at Euro USD, not my best trade setup for the week. If you go to the daily time frame, you see that we're still structured to the downside, but because we expect some dollar sell-off, we will see the euro rallying up maybe to this level or high up to this level here. Whichever it is, we're still not fully bullish on euro. So I expect that this channel should break any moment. I expect that this will break and take us to our level, our target level, which is 0.9546 level. Next on the list is USD JPY, and of course you can see with what is happening on the dollar and the intervention in Japanese yen, we are beginning to see a descending triangle pattern. Okay, so I will expect price to drop towards the 144.99 level. So from this level all the way here is have some 160 pips. For those that have some other interesting entry signals, I believe USD JPY will, will have some bearish sell-off before the week runs out. GBP USD, again, the setup is to the intermediate level, okay, is for price, the pounds to gain against the dollar. So my target is, think about 170 pips. Last I measured it, yeah, around that. 180 pips, price to rally up to 1.1564 level. So, but on the biggest time frame, you see that this is still not a bullish structure yet. What we're having is more like a bearish flag. If you can see it clearly, this is more like a bearish flag. So traders, you can take note of this. We're still not structured to the upside yet. This is still more of a bearish setup. So not one of my top trades yet, but then just in case these are trades you said, looking to trade into the week, just to give you some of the key levels. I'm looking for a break from this flag pattern, and then my target will be for price to drop, from whichever level it drops, at least to give us, you see that, to drop to this key level here. This is my target, this is my goal, for price to break that level and drop to the 1.06201 level. Australian dollar, United States dollar, here we're having an inverse head shoulder, inverse head and shoulder. You see the right shoulder, the left shoulder, the head, and the right shoulder. If this level gets to break as dollar continues to sell off, I anticipate price to rally up to the 0.6679 level. But then with the news on Thursday on USD, I will expect price to still drop, because all of these markets are structured to the downside, so still not to the upside yet. So beware, watch out for all of this. So let's go into some of my preferred trades, starting with GBP NZD. GBP NZD, you can see the head and shoulder pattern, and we have a nice breakout from there. So these are commodity pairs, NZD, Canadian dollar, NZD, Canadian dollar. These are commodity pairs. As oil continues to rally, I expect these pairs to gain value above pound sterling against Australian dollar and New Zealand gaining against it. So let's look at it. Starting with GBP NZD. So on GBP NZD, we had massive sell-off from last week. So any correction into the neckline where this broke out will be giving us a good risk to reward ratio for us to, short it into the 1.8862 level. Okay. Then Australian dollar, Canadian dollar, I'm expecting some corrections, but ultimately my bias on this trade is bearish. So any rally towards the upper boundary of this channel will give me an opportunity to short the market back to the lower boundary of this trade. Ultimately, we're looking for price to drop to the 0.8522 level. You can see where these are COVID lows. So I expect price to drop. We're still going to go down for more on this level. But for now, any correction to the upper boundary will give us a good risk to reward ratio to short into the lower boundary of this channel. Australian dollar, New Zealand dollar, let's look at it. Now, we still structure to the downside, as you can see. Look at the big picture. We had the breakout from this channel. That's nice breakout. We had a retest and price is dropping. So the ultimate target for a breakout from this channel is the 1.0869 level. You can see that we've not achieved that yet, just few pips away. So for those looking to take in some few 44 pips, well, this is your trade. And a break from there, we expect price to drop further to the 1.0809 level. This is also one of my high priority trades. GBP card, we're seeing that breakout from this channel, and already we're making a retest from the breakout point. Now, first level target is to the last low, which is 1.51025 level. A break from this level will see price drop to 1.48885 level. So traders, watch it. These 3 or 4 trades are my top priority trades: GBP NZD, Australian card, AUD NZD, GBP card. By next week, I will be showing you, we'll be reviewing these trades to see exactly how they played out. Now, gold has gone all ballistic as dollar continues to sell off. Now you can see that massive rally. We were looking last week, we're anticipating price to rally into this point, and it did rally in, and we sold out, but we didn't achieve our profit target before we had the NFP, and you could see how gold is rallying. Well, I don't have much dollar continues to sell off, we will continue to see more rally on gold. Probably, who knows? Maybe it could get to 1728 level, but this is not. Gold is really, really volatile right now. I would rather stay away from it. Okay. And Nasdaq, you see, we're beginning to trade again below the 11056 level, and this is really, really informative for those that are still that are still bearish on this pair. I'm really bearish on Nasdaq, on S&P 500, especially if price is below this level for Nasdaq, 11056 level. And for S&P 500, I was bearish when price broke the 3636.4 level. As we see, massive, massive stock dumping happened from last week, and I believe it's still going to continue until we begin to trade below the 3636 level. So traders, that's it from me, Gabriel. I wish you all the best into the week. And if you like the videos, why not like it and subscribe, click on the bell, and refer a friend to follow this channel. Thank you and have a great week. Bye-bye.